What do you do when you have plenty of equity in your home, but your monthly bills are just getting impossible to keep up with? Now, recently I worked with a couple in their late 50s. They live in a nice home with plenty of equity, and from the outside looking in, they're doing really well. But here's what their true monthly reality was: a $3,405 a month first mortgage, $1,434 for the second mortgage, and $4,432 in credit cards, car payments, and other debt. That's over $9,000 leaving their bank account every month, just in minimum payments. Now, your numbers, they're probably not that big, but if you're watching this thinking, yeah, the pressure, it feels pretty similar, then you're definitely not alone. And as you know, a situation like this doesn't just happen overnight. They took a cash out refi to help their kids. Then their property taxes and homeowners insurance went up and up and up. And of course, good old inflation gave them a nice roundhouse kick in the teeth. When the weight on their shoulders got heavy enough, they gathered all their courage and they asked for help. They called one of those big old national reverse mortgage lenders who advertises everywhere. They completed an application and got the appraisal done, and they were excited that finally things were going to turn around. Then they got rejected. No pass and go, no collecting $200, no collecting anything, really. But here's the frustrating part. They didn't get turned down because the reverse mortgage couldn't work. They got rejected because of lender overlays. These are basically extra rules some mortgage companies add kind of on top of the actual guidelines. They were this close to fixing everything, and suddenly the door was slammed shut. Then everything changed. After a couple days of really depression, they saw one of my videos on YouTube and reached out. They just wanted to see if there was anything that could be done to help them. And 34 days later, we closed their reverse mortgage. And what happened? Over $9,000 in monthly payments disappeared. By the way, in a minute, I'll go deep into the change we made that finally made that reverse mortgage work. But before we go any further, I just want to let you know I'm not going to share their names today. This was a very vulnerable moment for them, and I respect them too much for that. What I will share, though, is what actually happened. By the way, before we get there, my name is Jason Eichmiller, and I run Reverse Mortgage Reality. I've been helping seniors with reverse mortgages since 2008, and if you'd like to reach out and see if one could work for you, my contact information is right below. Feel free to give me a shout, call, email, or visit the website, reversequotes.com, and I'll do my very best to help. Okay, back to my clients now. In total, they eliminated $9,271 in monthly payments. It's not reduced, not worked out. That $9,271 payment, it's gone forever. Now, here's what most people get wrong. They think a reverse mortgage is just some last resort move. It's not. A reverse mortgage is it's simply a financial tool. And like any financial tool, when it's used correctly, it can completely change your balance sheet. Also, most people think reverse mortgages start at 62, and that is true for the government-insured HECM program, but there are also proprietary reverse mortgage programs that start at age 55 in many states. And that's the type of program this couple qualified for. Their equity paid off their first mortgage, it paid off the second, and yes, it paid off that high interest debt. And because reverse mortgages don't require a monthly principal and interest payment, that cash flow pressure just disappeared. And let me say something very clearly. Carrying 18 to 30% credit card debt in your late 50s while you're sitting on hundreds of thousands of dollars in home equity, it isn't conservative and it isn't smart. It's expensive and it can sink you if you're not careful. Your house is not just a place to live. It's an asset, and sometimes that asset needs to go to work for you. Now, on the other hand, does this mean that everybody should run out and get a reverse mortgage? No. First of all, you have to have sufficient equity to qualify. And if you don't have cash flow pressure, if your debt is minimal, if you're planning to move in a year, a reverse might not make sense. But on the other hand, if your monthly payments are dictating your stress level, that's a very different conversation. And this part matters. That first lender, they said no because of overlays. It was the same borrowers, the same equity, same house. There was just a different interpretation of the rules. That's why I personally work with every single reverse mortgage lender out there. It's for cases just like this. Again, after we closed, my clients' monthly payments dropped by over $9,200 a month. All because they strategically took advantage of the equity they had built up over the years. So if you're 55 or older and your monthly payments feel heavier than you think they should, stop guessing, stop assuming that you won't qualify, and honestly, if you get a no, but it doesn't really make sense, reach out and let's have the conversation. And of course, if it kind of goes without saying, but if a reverse mortgage isn't the right solution for you, I'll tell you that too. But if you're sitting on equity and drowning in high interest debt, you owe it to yourself to at least look at the numbers. Because sometimes the difference between stress and freedom is simply how debt is structured. By the way, my name again is Jason Eichmiller, and I was the one who personally walked this amazing couple through their reverse mortgage. And if you're in a situation where you'd like to see if your home equity can help your cash flow, give me a buzz. You can reach me at area code 888-309-9705, jason@keyhomelending.com, or www.reversequotes.com. Thank you so much for your attention, for your time, and if you need a little bit of assistance, just again, feel free to reach out and I'll do my very, very best to help. Take care of yourself.